With the market rallying massively today, the opportunities are becoming slimmer and slimmer. So in this video, I'm gonna go over the top stocks to buy now before the market hits new all-time highs. And I'm also going to go into why the market is headed much higher from here. So let's go ahead and get into it. Today here in Options Trading University, our clients had massive profits. As you can see, Chad sold his 20% profit in his leaps, 38% in the past week. Kevin made $21,000 today. Sean made $5,000 today. Brandon hit his monthly goals in 3 days. And then many other profits. In fact, Michael down here profited $19,000. And these were all on Leaps plays that I put in my Leaps entries and exit channel and my Ryan's Trades channel. So if you want access to that, make sure to click the first link in the description. But let's go ahead and dive into what caused this market to spike. Now, I talked about it over the weekend, right? I had my update video and I said if positive or even neutral news comes in from China and President Trump doing a deal in Geneva, Switzerland, we are going to see the markets rip anywhere from 2 to 4%. And of course, we saw that today. The market headed up over 4%, so that was pretty huge. And basically what happened was that the US import duties, the tariffs on China dropped from 145% down to 30% on Chinese goods, and Chinese tariffs on US goods went from 125% to 10%, okay? And these were all a 90-day pause. So that's what we saw, and that was huge for the markets and huge for the economy, okay? Now that we can see that, you know, China and our country are making a deal, they're actually working this out, that is very positive for trade and for businesses and consumers as well. So that definitely helped. And if you look at the CME FedWatch tool, this predicts the rate cuts. It changed drastically, okay? So basically what we're seeing now is we were seeing 4 rate cuts being priced in this year and 2 next year. Now we're only seeing 2 being priced in this year and 2 next year. Now, one would say, wow, that's not a good thing, Ryan, because less rate cuts means, you know, the rates are gonna stay higher for longer. Well, it's actually a good thing. The rates are coming down, right? There's still gonna be 2 cuts this year, but we don't have to do them as fast because a recession isn't being priced in, right? The reason we were pricing in 4 this year and 2 next year was because we thought that these tariffs were going to cause a massive recession, which would basically make the Fed cut rates even sooner and faster because of high unemployment rates and, you know, people not being able to afford stuff and just really bad consumerism, even potentially not inflation, but deflation, right? Because of people not being able to afford goods and just not buying them. So it's really good that we're seeing this. We're seeing, you know, rate cuts coming in, but at a slower rate because obviously the market is not pricing in a recession, right? And I do want to get into one other thing before we jump into the markets, okay? Let's go over the M2 money supply because a lot of people don't talk about this, but what I'm seeing here is the M2 money supply, okay? This is the supply of all the US dollars and checking, savings, right, in circulation, money that's printed. This is going up, okay? This is going up. In fact, when we saw, you know, when COVID happened and they printed trillions of dollars, you could see that the M2 money supply had a record jump, right? The chart looked like a stock chart, like a crypto chart, just went straight up, right? Because they were printing and printing and printing money, handing out stimulus checks and all of the above, right? And then when the recession hit and the Fed started raising interest rates, right? They started shoring up all that money supply, and that money was basically being dried up out of the markets, as you can see this decline here. But we are going back up again, and I do want to show you, basically, this is the money market funds. Basically, this is how much money is sitting on the sidelines in money market funds, ready to be invested into stocks, real estate, and stuff like that. There is 7.24 trillion. So this is a record, right? This is a record amount of cash on the sidelines right now. And what's interesting about this is that you could see that the cash in money markets just keeps going up and up and up. So it's sitting there waiting to be invested, right? Versus when we saw the M2 money supply here, right? Money was printed, money just kept going into circulation. But if we look at the dates from like April 2020, right, to let's just say July or May 2022, okay? It was just a straight up chart, right? More money coming into circulation. But if we look at the money market funds, we could see that from April 2020 to May or July, right, 2022, it was kind of a flat line. That means the money that was printed and going into circulation, right, was not just sitting in the money market funds, it was going into the stock market. That money was going somewhere. It was going into assets, as you see, right, because of this flat line. Now, what we're seeing right here is we are seeing money market funds go up, and what we want to see, or what we expect to see soon here, is that this line will also flatten, because that money will, instead of just sitting in money market funds, it will start pouring into the stock market. In fact, I think we will see a dip, kind of like we saw here from April 2020, back when COVID was like a big thing and everyone was scared, had their money in ready to just in cash, ready to invest, but weren't quite ready to hit the trigger yet. And then boom, you could see the money market funds decrease because people were starting to invest that cash. I do expect to see that very soon. We may see kind of a pullback here in money market funds because that money is going to start flowing into assets, and that's what we're seeing right now. So if we look at the S5FI, this is basically showing you S&P 500 stocks above their 50-day moving average. 71% of stocks are now above their 50-day moving average, okay? This thing can also go much higher. We could get up into the 80s, right? Like back in the last crash that we had August 5th, right? This, 40% of stocks went below their 50-day moving average, or only 40% were above their 50-day moving average, rather. 60% of stocks were below. And then you could see this number go up to 81, right? And then continue to go up to 86. Okay, so we have a little bit of room here to go as well. So I do expect the market to pump higher here, okay? Everything's kind of lining up. Everything's looking perfect right now for QQQ to start heading higher, all right? There's a lot of people shorting here. There's a lot of people trying to get short, and they're just getting squeezed out and having to cover, kind of like they did here. We thought, potentially, okay, maybe we get a little pullback and dump here, right, before heading higher, and that didn't happen. In fact, we gapped up, which causes more people that are short to start covering their shorts, which causes the market to even push higher. So I do expect we are going to be in more of a V-shaped recovery here. I wasn't hoping for this. I was hoping we were going to get some more action to the downside for some more opportunity, and then, to ride those stocks up. But it looks like we are going to get more of a V-shaped recovery, okay? I'm bullish. I love being a bull, but I was hoping that we were going to get a little bit more time to acquire more stocks at a discount and all of that stuff. So now what we have to do is we really have to do our homework to figure out, okay, which stocks are still at a discount, which stocks are potentially will give me the most bang for my buck, okay? And that's what we're gonna get into next. But I do believe that QQQ from here can head up to 520, 530, maybe even 540 in the next couple weeks, okay? I'm not going to kind of predict just yet, but I do believe in the next couple weeks we will see a higher QQQ, and a pullback is not very likely here. If we get one, be thankful for it and take advantage of it. But let's go ahead and dive into some of the stocks that are still at a discount and that I'm acquiring right now, selling cash secured puts, and even entering leaps on any little pullback that we can get. But before we do, if you do want to make multiple six figures trading options, make sure to click that very first link in the description. I just uploaded a new interview with one of our clients who made $79,000 in the first 26 days of trading in Options Trading University. So check that one out. Sean, great guy, Anoop, and Jason, some of our testimonials, check those out. Also, if you do want my free trade ideas, you can follow me on Instagram. I shout them out there, as well as my free newsletter, both in the links down below. But let's go ahead and jump into the stock list, okay? VIX is below 20. That's one thing we were talking about. Okay, if we look at the VIX, I said once this thing gets below 20, and it closes below there, we're basically in the zone of confidence and greed. And this is when the markets start really heating up. People get greedy and keep buying stocks and keep riding the stock market higher and higher and higher, okay? These are the areas where you have to be more careful and cognizant of which stock you're chasing and which stock you're buying, okay? I don't like chasing the tops because you end up in a situation where, VIX is sub 15 down here, and then you get a VIX 29 or even a VIX 60, and the market crashes on you, and now you're stuck with shares at top dollar, okay? So you have to be careful here, but I do expect the VIX to just kind of trend downwards. You know, potentially we might even hit a low on VIX 12, 13, okay? And the market will hit new all-time highs. So that's what I'm expecting, all right? Will we get a blip here and there? Sure, it might be a bumpy road, but we're kind of in this zone of confidence, zone of greed, as I would say. So let's go ahead and dive into the first stock. The very first stock I want to take a look at is SoFi, okay? This is going to be my favorite stock right now. I just added a bigger position into the portfolio because we're still at a massive discount from all-time highs, okay? Still a 23% discount, and the options premium is very rich in SoFi. So I do believe this is a company that's small enough to where you're going to get a lot of bang for your buck. You're going to see new all-time highs on the stock. And fundamentally, it's a really good stock, okay? The PE ratio is, let's see, in the mid-30s, 33, and it's in the online banking sector. They utilize AI technology to help their customers, and I do like SoFi a lot. So what I did was I added to the portfolio, as you can see here. We could go down to SoFi, and what I did was I sold 20 June 13th, 13 puts, and 5 more of them down here, so 25 total. Basically, I'd go here to the options chain. If I were to open some up tomorrow, maybe I'll go out 32 days, and I would again go to either the 13 or the 13 and a half. Let's do the math there. If I went aggressive, I went for the 36 deltas and I collected 53 bucks per contract divided by 13.5. Okay, that's gonna be about a 3.9% return, almost 4% in 32 days, or in basically 30 days, okay? So if you multiply that by 12, you do that annually, that's 47% on your money. Still a very, very good return on a safe stock that I believe is going much higher from here. So I do like SoFi, 13 and a half puts, getting a little bit more aggressive with the deltas, going closer, 30, 35, instead of what we were doing back when the stock market was crashing. We were going 20, 25 delta and making, you know, significant premiums because they were much higher when the stock market was scared. So now let's go ahead and dive into the next stock, okay? The next stock is gonna be Apple. This is another one that I added more to the portfolio today because if we go from all-time highs at 260, basically 259, okay, we're still down 18%, so pretty significant. And I do see a lot of opportunity here. I do see Apple going a lot higher. Now, is it gonna be a V-shaped recovery? Probably not. It'll probably be more of a stair step upwards, which is fine because that means there's a lot of opportunity to basically sell cash secured puts, buy shares, and even buy some LEAPS options. Now, I exited my LEAP options today because I bought them on Friday prior to this jump up, and then I made like 20% in a day basically, so I just got out of them. But I do have 2 more cash secured puts at the $200 level that I sold today. So that's exactly what I would do. I'd maybe go out to June 20th, 39 days out, and sell the 200 strike, okay? And that's what I did. So you're gonna make around, 1.5 to 1.8% there. Not a lot of money there. If you wanted to make a little bit more bang for your buck, you'd go for the 205, collect like 2%. But, still a great stock to get assigned on at these levels because we are going higher from here on Apple. I think it will retest all-time highs in the next 2 to 3 months. So definitely a good stock to buy. And if I were to do a LEAPS option, I'd probably go out, anywhere for, let's just go 500 days out to give ourselves a lot of time to be right. And I would just buy the 190s for 4,700 bucks, okay? So that's what I would do there. Now let's go ahead and check out the third stock, which is Amazon, okay? I think this thing is definitely going back to all-time highs. We're still at a massive discount from all-time highs, about a 13% discount. And, this one is a safe play for some LEAPS that I have. I currently have some LEAPS and shares as well as cash secured puts. If we go to my position here, I'm already fully allocated there. Shares, I have some covered calls. I have some LEAPS that are underwater, that have been underwater for quite a while because these were the first ones that I got into. But what I would do is I'd probably go 39 days out and I'd go ahead and sell the 200s. That's a perfect strike. Collect, almost a little under 2% there. and collect your 380 bucks. Okay, so that's what I would do there. Now, another one that I wanted to talk about is actually two more. Actually, Tesla is a huge one. Okay, there's a lot of room for this to run up to at least 400. So this has a 23%, upward trajectory potentially when the robo-taxi news comes out. So these ones you could do aggressive cash secured puts or leaps, but I like to be safe and do the cash secured puts. So we'll go ahead and look at those. Let's go ahead and go 39 days out, and I'll just go to the 30 delta, okay, which is going to be the 295 strike. Let's calculate the return there. All right, so you're going to collect 1,300 bucks basically divided by 295, okay, and these are pretty aggressive. You're going to collect 4.45% on your money on this strike price, but I believe we're headed much higher from there. So I really like Tesla at these levels. And then the last stock is going to be Nvidia, okay? This is finally a player. It's finally coming back into this upward momentum trajectory. We broke this long-term downtrend that we've been seeing since January of this year, okay? We just broke above it. And I do believe we are probably headed back to all-time highs in the next 2 to 3 months. So this is a perfect spot to sell aggressive cash secured puts. If we go to Nvidia's option chain, okay, you go 39 days out. They have earnings, mind you, on the 28th of this month, so keep that in mind. But you could go aggressive, 35 delta. You go to maybe you go to the 115 strike, which is 30 delta, and collect $4, so 400 bucks. Let's do the math there. So 400 divided by 115, and that's going to be a 3.47% return. So wonderful return, Mag 7 stock, and it's headed much higher. So if you enjoyed this video, make sure to please give it a thumbs up. That's going to help it in the algorithm. And I look forward to seeing you in the next video. Take care, and I'll see you there.